Hey traders, the Chart Guys Swing Report newsletter is currently live. In the description of this video, there are two links. The first is to the sign up page where you can also get emailed an example of a previous copy. And the second is to an in-depth video to let you know exactly what the Swing Report entails. Appreciate your attention. Let's get on to the charts. Hey everyone, fresh out of the shower, checking in on some trade reviews. It's been a fairly solid day and want to go over Tesla, which was the majority of my day, and then one Amazon bearish trade. And before we go into the details, just want to talk a little bit about my style. Again, scaling in and out has changed the game of trading for me. I am way more comfortable with my entries and exits by not trying to nail tops and bottoms, by scaling, and I'll go over the example of that. And note with scaling that I'm not hitting home runs. Again, I'm just going on base hits at this point, going for base hits. At this point in April, I had hit my 2020 goal for profit, thanks to all the volatility that we're seeing in the market this year. And so from there, base hits is all I'm looking for. And if you get enough base hits, today ended up being over a 4-day maker, almost a week maker by those solid trades. But no individual trade that I made was a big winner. So again, just those small hits adding up. And I will show you how I use scaling in and out to always be in control of the trade. And we'll use some analogies as well. So the setup is, for my day trading, the vast majority of my setup is sometimes the daily time frame, but the majority, well, we'll say it's the daily and the hourly, but mostly the hourly. So I head into today saying, all right, I'm looking for an hourly oversold bounce on Tesla. We had a straight drop yesterday, and that straight drop continued into this morning. You know, if we had bear flagged midday yesterday, it would be different. The hourly RSI would not be as beat up. It's more extended. This is what I call a waterfall drop, which is more interesting to me, because that's when we usually get better bounces rather than stair-stepping on the way down. So we started this morning with weakness. The hourly RSI was low 20s, maybe even approaching teens at the low of the day. And so I sat down at the computer a little bit after the open. Today is my off day where I'm not doing the live stream. Jason's doing the live stream here with the Chart Guys. And that allows me a little bit more focus. I'm a better trader when I'm not live streaming and answering questions, when I'm just in the zone, not talking to anybody, only watching one ticker or two tickers. In this instance, it was Tesla and QQQ, always watching that correlation. But it allows me better focus, and it's easier for me to get in my zone as a trader. So my scaling in and out strategy, I never want to have my fully allocated position filled. So let's just say, for math purposes, my fully allocated position for Tesla would be 200 shares. That's as much as I'm willing to enter on any scaling in and out on Tesla. And I don't ever want to reach that 200 shares, because as soon as I'm in those 200 shares, I am out of ammo. Let's use an analogy with bullets in a gun. So let's say that let's break it into fours. So 50 shares at a time for 200 maximum, that's 4 bullets. And if I enter 200 shares, I have fired all 4 of my bullets, and I am now out of control in the trade. And if we keep dropping down and we don't start that hourly oversold bounce, I very quickly enter a world of hurt, and there's little I can do to manage that trade. I always want to stay in control, which means I don't ever want to be out of ammo. So on this pullback, I usually make my first entry with, we'll call it 100 shares out of the 200. So I'm firing 2 out of my 4 bullets on my first entry. And this morning, that entry was 1384 first thing. So it looks like it was on this candle here where I made my first entry. So on this pullback, this is the 1 minute time frame. I'm saying, all right, I'm making my first entry here. If we had kept dropping down to the 1360s with no little bounce in between, I would have likely started to scale in maybe my third and then fourth entry to total the 200 shares. So I enter my first, and what I'm always trying to do is enter my first position right before a short-term bounce. So I do use these short-term time frames to help with that, because I instantly start to position myself to be in control of the trade. So I made my first entry at 1384. Very quickly, I sell half of that position at 1393. So a $9 gain. Again, it's not a home run, but with that $9 gain, my break even on the trade is now 1375, and I get a bullet back. So I fired 2 bullets out of my possible 4, and I now get 1 back, and my break even is 1375 of my remaining position. So from there, I make another entry of 1 bullet at 1370. And at that point, we must have been dropping down to a lower low. And you know what? I have to restart because I made my first entry looking for the potential of a 2-minute higher low compared to 1376. So I wasn't trading yet until over here. So we had already hit the low of the day. We had bounced a decent enough amount where I said, okay, I'm going to attempt to make that entry for the higher low off of 1376. So it was here where I made that first entry at 1384, and here where we had enough bounce for me to quickly sell half of that position for a $9 gain. So at that point, my break even is pretty much the low of the day. I have 3 bullets in my possession. I'm in a quarter position, and then we hit a new low of the day. But I'm still interested because the hourly RSI has only gotten more extended at this point, and I'm playing for the hourly oversold bounce. So I re-enter one quarter position at 1370, and everything I'm doing is with market orders because Tesla is liquid enough that I'm just using market orders for entries and exits because I'm going for speed here, not really trying to have my limit orders hit and sit around and wait for that. So I re-enter a second quarter position. So now I'm in a half position with an average of 1375 and 1370. So I fired my second bullet. I've got 2 left. And then we start the bounce. So we start the bounce. I exit another quarter of that position. We'll call it an $11 gain. So that's this bounce getting underway. And with that $11 gain, my average, which was 1372.50, is now 1361. And again, every time I'm selling that half position, my break even then goes under the low of the day. That is keeping me in complete control of this bounce the entirety of the morning. So sold that one there. Looks like I rebought here at 1380 when I saw little pullback, and then resold it again for a quick $4 gain. So after all that little $4 flip dropped my break even more. So now my break even on my quarter position is 1357. And then I let that play out a little bit longer because it was clear. All right, it looks like our bottom has been set for now. Let's see what this hourly bounce looks like. And I did not hold it until the 1440s or 1460s. I was exiting it in the low 1400s to lock in that gain. So I didn't let the hourly bounce play out a significant amount of time, but it was a very solid win, and I locked it in. Again, only a quarter position, nothing huge, but the gain on that quarter position, which had a break even in the 1350s, if I then sell that up in the 1400s, it's a nice 3 to 4% gain on a quarter position, which would be roughly a 1% gain on a full position. And I never at any point had more than 2 of my 4 bullets fired, which kept me in control of the trade the entirety of the time. I had then, from there, I traded Tesla a lot more, probably another dozen trades where I was shorting it. There was one more trade that I want to point out because I was shorting it and longing it, but this was a very clear. So I was watching the high of the day, and I was watching, again, QQQ the entire time. I'm watching it, and it's doing the same thing. And it was the high of the day. We came up and rejected from it. Solid 2-minute consolidation, but just a higher low. Right here, I made a bearish entry looking for a 2-minute lower high for the potential that we reject from the high of the day, lose the 2-minute uptrend, and pull back down into the upper 1300s. I wanted to position myself for that possibility. During this entry that I made right here, which was pretty much 1417 or 1418, and using 1424 as my stop, I said, okay, I'm watching for a pullback, and I didn't see any weakness here. And what I saw was QQQ pulled back a little bit more, and Tesla did not. So I said, okay, Tesla now has some relative strength against QQQ, which is a point in favor of the Tesla bulls, and I'm in a bear position, so I don't like that. That puts my red flag up. And then I saw bids. Every time the bid would get sold into, 418, 419 bids would keep popping back up, keeping from any consolidation on this 2-minute candle. Right here, I'm sitting here saying, okay, I need this 2-minute pullback for that lower high, and I didn't get it. So I sold for a $1.20 loss. Let's say I was in at 1417 short. I sold at 1418.20 and instantly went bullish because of the observations that I was making. And that followed through for $20 of upside very quickly. So I gave up. I instantly, within 2 minutes, said, okay, I'm eating this tiny $1.20 loss and then flipping bullish for what ended up being $20 of upside. Tiny loss, significant upside, and I did sell right under 1440. So again, just a quick exit from that entry, bullish 1420, exit just under 1440. So again, another solid 1% plus gain on that trade. So now let's go to the Amazon trade. So at this point, again, hourly is my setup. This bounce has already played out for Amazon. I chose Tesla for the bounce. Amazon had a bigger bounce. And I said, okay, that's a 5% bounce. And I know we have to change the hourly trend if we're going to see bounce follow through. The odds that we're just going to bounce all morning straight up is very unlikely. So I say, okay, it's time to be watching for hourly consolidation. I then zoom in for more detail and I say, wow, that's an extended 15-minute chart. We haven't even changed the 15-minute trend. I'm absolutely interested in a bearish entry. I then zoom in even more, 2-minute time frame. Okay, I want to enter when the 2 minutes extended. I already know the 15 minutes extended. That's in the back of my mind. What's the 2-minute doing? And when I looked at it, it was right about here. I said, all right, that's nice and extended. I know that if we're going to keep this move going, we will have to see the 2-minute uptrend continue, which means 2-minute consolidation. So again, I want to make an entry of my first scale in with short. I want to be in profit right away. I don't want to be entering and then red right away. It's a very different psychological standpoint if that is how I'm entering the trade. And then I'm just looking to get back to break even. Whereas if I enter the trade and very quickly go into profit, again, being in control of the trade is so important. So I see this 2-minute time frame getting extended on top of the 15-minute extended, on top of the fact that the hourly has not changed the trend bullish and we're coming off the low and a 5% bounce has already taken place. So I made my first bear entry at 30.26. And I would have entered another one if we got up to 30.46 without consolidation. But first entry, 30.26. Fortunately, I didn't have to sit around long before we started pulling back, knowing that the next time we pull back, I am just looking for a 2-minute higher low to form. So what do? Again, I entered, let's say my maximum was 200 shares, and I entered 100 shares and fired 2 of my bullets on my initial scale in. I had 2 more to go. And then we get this pullback. And on that $10 drop, I exited half of my position at 30.16, $10 gain. So I regain one of my bullets back. I now have 3 bullets. I've got a quarter position left. And my break even is 30.36. From there, all I have to do is put my stop loss above 30.31. I chose break even. I set my stop at 30.36. And I can essentially close my computer. Because if I'm wrong, I have 0 risk. And if I'm right, we see hourly consolidation and I have a solid win. So we then got pulled back. We had a QQQ. And again, the whole time I'm watching QQQ, as I'm trading Amazon, we had a 5-minute head and shoulders set up on QQQ. It followed through right here and confirmed. I noted Amazon's not following through and confirming, but eventually it did. And I just had a visual target for that trade where my visual target was, okay, if we're going to see an hourly higher low form, which is the most likely scenario due to the size of the bounce, I'm going to go a bit conservative and I'm looking to exit this trade at about 29.70-ish. And ended up covering. As soon as I saw this level hit, I market bought to cover because we were a bit extended on the 5-minute time frame on the way down. I said, that's my target. That's all I'm looking for. And that's where I exited. So successful trade there. And again, only a quarter position, but it's a 2% gain on a quarter position. So at this point, now we're at a 4-day maker, over a 4-day maker, with no individual trade being a huge win. Just a lot of smaller trades that ended up getting some decent follow through with the amount of volatility we're seeing in this current market. So those are my trades, and I could have posted my messages I was saying in the chat room during all of this, which would have been a little bit helpful as well. But those of you that are in the Slack room, you can check that out. I put one of them in trade review already. Anyways, hopefully that was insightful. That's been my day, and that is my style of trading. Scaling in and out, always wanting to hold on to some bullets, never wanting to maximize full positions, because at that point, I give away the keys to the control of the trade. And always just positioning myself. I will take those $5 and $10 little wins on Tesla all day, knowing that it is significantly dropping my cost basis as to where my break even is and limiting my risk. Just back to this Tesla trade, I would say 2 out of 3 times I will stop out of that trade, break even, or a small loss, because I'm trading against momentum. It was a very significant bull bounce, but that risk is, $0 to $10 of a Tesla move, and the reward is $50 to $60. So I will take that trade every time, because I know even if I'm going to stop out 3 out of every 4 times, that one time where I don't stop out will offset those tiny losses. So I love positioning myself in risk-free trades and letting the hourly most likely scenario try and play out from there. And I'm done talking. Hope you have a good rest of your day, and we'll see you soon.